All right, so when a giant like Comcast drops its earnings report, you know it's never just about the numbers, right? It's always a story. And their latest one for the end of 2025, wow. It's really a tale of two companies fighting a war on two totally different fronts. So let's dive in and unpack this. And this whole thing, it really comes down to one single question. Comcast is making this huge, company-altering bet. They're basically sacrificing profits today for what they hope is a much stronger tomorrow. But the real question is, in this absolutely brutal environment, is it gonna pay off? Okay, so if you just glance at the top-line numbers, it's kind of mixed. They beat expectations on earnings per share, that's the good news. But, and this is a big but, they missed on revenue. That means less cash actually came in the door than Wall Street was hoping for. And right there, that's the tension we're going to dig into. All right, let's start with the foundation, the bedrock of the company, right? Their massive broadband business. Because this is where the fight is the toughest, and honestly, where Comcast is making some pretty radical moves. So, this number right here, this is the one that really jumps off the page. Negative 181,000. That's how many broadband customers they lost in just the last 3 months of 2025. This is all about the super tough competition from fiber and fixed wireless. And yeah, that's a number you just can't ignore. And believe me, they are not ignoring it. This quote from Steve Croney, the new guy running this whole division, it's so important. It basically says, hey, we're not just going to sit here and hope things get better. They're looking this new reality square in the eye and totally rewriting their playbook to fight back. So what is this new playbook? Well, it's pretty much a three-pronged attack. First up, they've simplified their pricing. Just 4 easy-to-understand tiers across the whole country. No more confusing deals. Second, they're offering a 5-year price lock. That's huge for loyalty. And third, and this is a big one, they are getting super aggressive with bundling their wireless service. I'm talking about giving away free lines for a whole year. Okay, so here's the catch, right? Every single one of those moves costs them money right now. Lower prices, free phone lines, that hurts the bottom line today. But the big bet is that it'll stop people from leaving and build a much more loyal customer base for the future. It's the classic short-term pain for long-term gain. All right, let's switch gears completely. Let's talk about the other side of Comcast, their content and experiences division. Because while the internet side is going through this tough fight, the entertainment side is, well, it's absolutely crushing it. I mean, just look at this chart. The contrast is wild. The movie studio business had a rough quarter, down over 7%. The media part, which has Peacock in it, grew a solid 5.5%. But the real showstopper, the theme parks, up almost 22%. That is just a staggering jump. And what does that growth look like? Well, how about this? For the first time ever, the theme parks pulled in over $1 billion in profit in a single quarter. A lot of that incredible performance is coming straight from the launch of the new Epic Universe in Orlando. It's been a massive, massive hit. And hey, let's not forget about Peacock. You really can't sleep on their streaming service anymore. It is finally hitting its stride. Paid subscribers are up, revenue is way up, and maybe most importantly, they're losing way less money. That NBA deal they struck looks like it was a brilliant move, turning Peacock into a real growth engine for them. So you've got this one part of the company under a ton of pressure and another part that's just booming. So what's the glue holding it all together? It's their wireless business. This is kind of the secret weapon in their whole strategy. Get this. 2025 was their best year ever for wireless. They added a record 1.5 million new lines. Yeah, this is not some little side hustle anymore. This is a core part of how they're planning to grow. And this is why they're so pumped about it. Look at this chart. Right now, only about 15% of their internet customers also have their wireless service. That means a whopping 85% of their huge customer base is still out there, ready to be signed up. The potential for growth here, it is just enormous. Okay, let's connect the dots. Remember this number from earlier, that negative 181,000? That's the broadband customers they lost in Q4. It's a painful number for sure. But in that exact same 3-month window, look at this. They added 364,000 wireless customers. So you've got this big loss over here and this huge gain over there. How do they fit together? It's all about the strategy. And they call it the convergence strategy. It's actually pretty smart. They're using their fast-growing, profitable wireless business to prop up and stabilize their core internet business. By offering those free wireless lines, they make their internet package way more valuable. Stickier is the word they use. It just makes it a lot harder for customers to leave, which directly fights back against those losses we saw. Okay, so they're in the middle of this huge strategic pivot. So what should we be watching for in 2026? Well, there are a few key things to keep an eye on. And to their credit, the company is being pretty upfront about the timeline. They're saying, look, the first half of the year is going to be tough on profits. We're spending a lot of money on this. But then, in the second half, they expect a meaningful portion of those free wireless lines to flip over to paid plans. That could be a huge boost. And by the end of 2026, most of their internet customers should be on this new, simpler pricing plan. And here's a quote from the guys at the very top, the co-CEOs, basically doubling down on all of this. They're saying, yeah, we made some big, decisive changes. We know it's an investment, but we're convinced this is the path to long-term growth. So now it's all about just making it happen, all about execution. And that brings us right back to where we started. Comcast is trading today's profits for tomorrow's customers. Simple as that. It's a really bold, really decisive, and yeah, a really risky move, especially when the wars over connectivity and streaming are just getting crazier. So the big question for 2026 and beyond is, will this massive bet actually pay off?